Hello, my name is Lindsay Duff, and I'm with a company called Responsible Day Trading. I've joined Mr. Topstep here because I believe in their values of education, and all I want to do is make sure that people make it. So, one of the things that really brings me joy is seeing someone grow through an education process. And I know that they have the same values here at Mr. Topstep, and I'm so happy to be a part of it. So, without further ado, let me tell you a little bit about what I do here. I've been with the futures industry since about 2005. I've worked for several education companies until I finally decided to make my own. One of the biggest things that had me leave those education companies is that they promised to help their students, and I never saw it follow through. So, I know some of you guys already know me, some of you know my style, but I know it's a little bit different than what you're used to seeing here. So, let's dive off into what I do, how I read the charts, and if you're interested in learning more, you can feel free to reach out and I'll be happy to help. All right, guys. So we're going to see a lot of charts here. And I do only use Fibonacci numbers, so I want you to be aware of that. I use them for my EMAs. I use them for my tick charts. I did have these MACD especially made with the ADX. So we see these white BBs when we see some really extreme moves, and they give us just another bit of insight. The MACDs are my bread and butter. Divergences are something that I look for across the board. They help me to understand if we're seeing a slowdown, and they also help me to place my risk in places that make it easier to have a much smaller risk. So, the first thing I want to come to is I want to talk to you about I only typically use what I call a three chart system. So, something more like the 10946, the 1597, and the 233. So, there is the middle chart, the bigger chart that's telling us more of the direction, and then there's the trading chart. Lately, I've introduced the 89 tick chart, and sometimes I have some of these on the MES and some on the ES. If I was to flip back and forth between the MES and the ES, and we may just do that really quick, you're not going to see much of a difference in the way the chart looks. It looks almost exactly the same. So you could work on the MES if you wanted to have a little bit lower risk, if you're practicing something new, or I usually suggest that my students, once they go to a live account, start with the MES. And with some prop firms, you can trade the same instrument, um, as in the micro and the mini. Some you can't. So I do have a little bit of a strategy where I might enter on the micro. And if I'm not really comfortable with it, and as I'm getting more comfortable, I'll add it on the e-mini. But let's run through this really quick and talk a little bit about what we're seeing here. So first I want to start off with this daily chart, and I'm going to close this up just a little bit so we can really look at what's happened in the last couple of years. And I know it's taking a big step back, and actually had all of these drawing tools turned off. We're going to go ahead and do that. Actually, we'll just keep it here for a moment. So as you can see, when Trump took presidency in 2020, this is what we saw happen. This is our current market right here. This was the first time he came into presidency. Now we see this pullback that happened into the EMAs. We pushed through with strength, and these MACDs pushed down so hard, and price pulled so far away from the EMAs that we anticipated it to what I like to call snap back into the area. So we could really see that anticipation, because if we even close this up more and we really look, this is a very extreme area for that MACD to reach. It never typically reaches that area. It wants to stay closer to the zero line. And with it being that far away and price pulling this far away from the EMAs, I like to think of it like pulling that arrow back and letting it go, because it's going to fly once it goes in the other direction. And that's exactly what happened. It popped up in the other direction. Of course, it hung out here for a little bit, but we could see the potential for it to continue up. So the MACD said, no, we're not going to cross this bottom Bollinger Band again. We're going to push up here. And then it was off to the races. We did have a little bit of a pullback that happened here, a little bit that came on the other side here. But in the long run, we're still making higher lows than this last major low. And we pushed up again, new highs. And what happened? Trump came into presidency again, and boom, the market pushed all the way down. It's kind of like Danny said to me earlier, maybe it's planned. But, that's just speculation. Anyways, so when the market pushed down like this, we kind of anticipated it. If you looked back to what happened before, it looks almost identical to the way it looked back then. So we saw this huge, huge, huge move down. MACD's got an area that is just very extreme for it to reach. And let me go ahead and turn these off really quick because these are a little distracting. Hide all those drawing objects. Perfect. So we saw this huge extreme area get reached. MACDs pull way outside of the Bollinger Bands. And anytime that happens, they do tend to snap back into the Bollinger Bands and push to the opposite side. Now, something that happened here when this BB could not cross that bottom Bollinger Band and we pulled back into this area, it was a really, really good indication this was going to snap back up and continue. Now, once we've gotten back above here in the back above the EMAs, back above the zero line, there's a certain point where I consider it we've changed the direction to the upside. And the first thing is it is getting back above the zero line, breaking free of it. Next one is breaking free of the EMAs. And then I like to see a close that typically happens above the first bar or below if we're going to the downside. And this is the one that really breaks free of it. Now, we didn't exceed that one anymore. So is this a false breakout? I don't think so. But there's you never know, the market's going to do what it's going to do, and we're just here to pick up the breadcrumbs along the way. We're definitely not market movers, but there's lots left for us behind. So we've seen this MACD pull down into still above the Bollinger Band, right? And we pulled down and made this little bit of a reversal bar here at the EMAs. What I would typically anticipate is it to start pushing up here. Now, the MACDs may come down and roll across here. We may pull back just a little bit more and equal this again before it goes up, kind of like we saw back here, pulled up, came back into the area, and then went up. So that may be something that we see happen in there. But it's really just paying attention for me, what the MACDs tell me. Are we going to have a strong move to the downside? Is this going to start to roll up and push up to the upside? Now, obviously, the bar can change throughout the day on the daily chart. And this is why I don't put a lot of heavy emphasis on what's happening on here. I have started creating some bigger charts that I did not have or I don't currently have for my students, just because I want to see what the bigger picture is looking like. We did break back below the zero line, not below the EMAs here. And these EMAs are what I like to call strong into the upside. Now, I think we all kind of anticipated when we had this huge gap here, we might see some sort of movement back to that area. I'm really going to need to see at this point the MACDs push up back above, pull back into, and really push back up to tell me that we have more of a possibility for this to continue up. We did end up with some divergences here as the price was pushing higher and higher and higher. MACDs were really struggling. So this breakout that happened here was really, really awesome to watch because the MACDs were really telling us that that was going to happen. Let me open up this chart just a little bit more so we can just kind of look at it a bit bigger. As this is pushing up, now we don't have a very strong move so far in the MACDs to the upside, but this is a giant chart. This is not one that I typically use. My next biggest chart right here, and I know they're not in order on the screen, so I apologize. Right here, we can see that, oh man, it's trying to get back above that zero line. We haven't quite gotten there yet. Now, something I look at is what I call these tiny little bars. This tiny little bar is also a flag reversal bar. It's just this tiny, tiny little thing. And what happened right after that? The MACDs did not roll down. They popped up. Price popped up. What I'd be looking for here is for this price to continue pulling back into here. MACDs have almost no reaction in that pullback and pop up to the upside. Now, we may see it pull all the way back towards this EMA as we had right in here, maybe making a bit of a head and shoulders if it's going to continue down. Now, we are at this zero line on this giant chart. So is it going to roll down right now? Well, it doesn't look like it should. It's got separation between the BBs and it's got strength. So typically we see continuation with that separation and that strength, and these weaker pullbacks like happens here and what happens here really give us the indication that we're looking for more to the upside at that point. So these are just ones I want to kind of brush over quickly. Now, my 28,657 is something I use on a regular basis if I am looking at this little combination of these three charts right here. This is my bigger, my medium, my small. Now, I do have some students who prefer the combination where they've got the 4181, 1597, and 610. It's really a preference. And I like to allow my students to, I don't ask them ever to trade like me. I want them to trade like themselves. And so if those are the charts that make them most comfortable, then definitely use those because I can understand that we all see something a little bit differently and they may see their edge a little bit better there. But the thing is to have the charts separated a certain number of Fibonacci numbers apart equally on your big and your small one to make sure it stays very cyclical, almost like those cogs in a wheel. So that's really the biggest part of that. Okay. Letting y'all in on all my little secrets. They're not secrets. They're just part of what we do. All right. So our 28,657 is typically our biggest chart besides the daily chart that we look at. Now the 28,657, I can see it's broken above this high right here. We just gonna make that little bit of a pullback that happens. Let me move over my 10,946. We're gonna make that little bit of a pullback that happens here. MACDs, they do still have some strength. Let me go ahead and open this up so we can look at it a little bit more in depth. The MACDs do have some strength to the upside. It is working hard to break back to the upside. Okay. And what I mean by hard to break back to the upside is we have changed the direction. Yeah. I mean, we have changed the direction and it's very, very, by very, very little. Actually, we have not changed the direction on here. I apologize. I'm not separated from the EMA here. I'm separated here. This one would need to close back above here. So the direction hasn't technically changed on my 28,657. Is it trying to? Possibly. So we'd want to see it kind of pull back into this area, make no reaction in the MACDs or minimal reaction in the MACDs to believe that it's going to continue up. I love my MACDs. These guys are my bread and butter, and this is what I use in order to pretty much do all my trading. Now, I'm not going to look at the 4181 and the 610. I'm going to move to these charts right here. So the 10946, now we've had this nice little reversal bar look here. It hasn't quite broken out. So yeah, it's very possible that it might pull back into this area right in here. Now, what's going to happen as this is pulling back? The momentum of the EMAs are going to stay to the upside. So the EMAs may come up to in here as long as we don't have some huge pull to the downside, something like this. As long as we don't see something like this, the EMA should stay just moving up slowly. And when those EMAs cross over and we pull back into them, it's a really, really great place to take some trades, kind of like right in here when they cross over. I also love when they just pinch together and don't quite move over to the opposite side. Currently, on this chart on my 10946, and remember the direction is going to be different on all these charts because this is representing that 10,946 transactions has taken place, whereas 89 transactions have taken place with each bar you see here. So this one's going to move slower. I like to call these ones like my gentle giant. And I also look at these as kind of like generational charts. It's like the grandparent chart, the parent chart, and the baby chart. The baby chart's going to be running all around your ankles, but it's going in the same direction. So right now we didn't cross the top band with this pull up right here. And man, that is the tiniest of tiny bars. I think you can see it's just a close. So, that's a sign of a pullback. Maybe we see a pullback into this area right up in here. We do have an area that we had of support. We are pulling back just slightly in here. If this BB pops up a little bit more, maybe we'll see it go, but let's look here. We're not quite at our most extreme areas on this, but we are at some pretty extreme areas that usually give us a bit of a bounce back. So we'd be looking for a bounce back towards the area, maybe that 5841 area. We are going to now look at these three charts together. Okay, so my 1597 has been pulling back. The MACDs are not even breaking inside of the Bollinger Bands. It does say that we have the possibility for this to pull back. So it was telling us, typically right in this area, someone might be looking for a long trade, which would be right over here on the 233 and wondering, Why is this trade not working out? Well, look at what these MACDs are saying. They're saying, we have this last little push up. This W pivot tried to go up higher. It did equal that first pivot almost, but it kind of died out. And where did it take us to? That next EMA, which is what we were anticipating, making it to that EMA to be able to see the area for the push back up, which it did give us. When it pulled back up to this area, we did not cross that top band. So it said, hold up, we're not going to go any further right now. We're looking to pull back. So we have seen that pullback happening. As I'm looking on my 233, we see that we're getting back below here, but where are we? We're right at that EMA. So I may give it just a moment to push through. Obviously, this is at night. It's moving like molasses. So probably not going to touch anything tonight. Going to see how we look tomorrow because everybody's out celebrating the Memorial Day today. So this is what we're looking at. We're looking at how we pull back into areas, how our MACDs are reacting. We had a really good idea this wasn't going to go up much further because we started getting those white BBs, pulled back, pushed up, lower MACD. If you took the long from here, which is a viable long, you want to get out whenever you're seeing that not push through there and not push through in the top Bollinger Band here. Your white BB saying we have the possibility for a pullback. Now, if you have huge risk or if you have bigger risk than what I use on your trade, which my maximum is 3 points in risk. So if you have bigger risk than that, you may hold for this kind of pullback. For me, or for anyone who may be trading a prop firm who doesn't, who penalizes you for that pullback, maybe looking at the signals to take an exit and then wait for the pullback and get back in whenever it tells you then. So that's pretty much it, guys. That is my introduction to you. I hope that everybody enjoys it. And if you have any questions or comments, I'll be happy to answer them. You can reach out to me at lindsay@responsible-daytrading.com, and I'll be happy to answer any questions you've got. I just want to see you guys grow and be a part of something amazing like we are here at Mr. Top Step. So thank you for having me here, and I look forward to spending more time with you guys. And as always, I look forward to catching you on the profitable side.